Welcome back to Reimagine 2020. I'm Yonah Hochhauser, and I'm glad to be joined by Lou Kerner, founder of Crypto Mondays and JustStable. Lou, thanks for joining us.
Thanks for having me, Yonah. Great to be here.
Now, Lou, we've been speaking for already at this point a number of years, and you've been kind of praising the potential of stablecoins, of the DeFi space, mostly of stablecoins. I don't think even you knew how kind of large this would grow, or let's say even different, the shape it would take. Before diving deep into yield farming, and we will, kind of a macro level, did you foresee, kind of the shape that we'd be in today with stablecoins?
Well, look, my excitement, I got excited about DeFi, and then within DeFi, what excited me about stablecoins was, the scale of the market, right? Round figures, $30 trillion market in terms of the amount of dollars that are sloshing around out there. And it's growing. I mean, it's up more than 20% this year. So it's this massive, massive market growing by huge amounts. And it's essentially, up until a brief while ago, it was a monopoly. So in terms of markets that are attractive, it's the most attractive market, I've ever seen as a subset of crypto, which is, the shiniest object ever.
Mm-hmm. Well, speaking of it being monopolies and kind of opening up monopolies, I'd say in the past week or two, the biggest story has been SushiSwap, which is essentially they took Uniswap and they copied it and added governance token. And we could debate, the value added there or not, but there is no such thing as monopolies anymore, especially in this sphere when you can just copy paste. So I want to get your take on the whole SushiSwap saga. Both from the idea of just forking off from Uniswap and adding a governance token, as well as the whole controversy with Chef Nomi. I'll start off there. I know that you've been a big proponent of DAOs for a long time. There wouldn't be this whole Chef Nomi, let's say, controversy or hubbub about him controlling the money if there was actually a DAO controlling that developer fund, would there?
Well, it depends what the rules of the DAO were. I mean, for me, what's the most important thing is that people get to do whatever they want to do, right? And there's not somebody out there telling us what we can and can't do. And if people want to invest in projects where the people can take the money for themselves, I don't want to invest in those projects, but I don't want to stop other people from investing in those projects. If they want to, they shouldn't. But the opportunity to scam, for scams, obviously isn't something that's new to DeFi, right? I mean, it actually, in some ways, signifies that you're a thing. If there's enough money sloshing around that people can make, a high ROI from scams, that means that you're probably a thing.
Mm-hmm, mm-hmm. So I'd imagine that your take is that Chef Nomi should not have returned the money. There was no reason. He developed a protocol, or he copied a code, added, made some changes, and people put money in. And and it's his right to take out if he wants. He was going according to the rules of the code. I'm assuming that's the side that you're taking on the argument.
Look, I don't like it, but for me, this is all about community. At the end of the day, that's the thing that's different between crypto and everything that came before crypto. And what communities do I want to be a part of? And what are the rules of the communities that I want to be a part of? And I think maybe when you first get into crypto, you don't maybe appreciate how important the rules are, but that's, and so you might get involved in some things that you maybe don't understand. But in terms of where the balance is, right, I think once you start stopping people from being able to do what they want to do, it's a slippery slope.
Yeah, and I think that you really hit on a really important point. That's the key difference. There are rules. People that are coming from traditional finance, oftentimes they kind of don't have to listen to the rules, because worst comes to worst, I break the rules, and then the government will bail me out. Or I could say, oh, I didn't know. As in, there are rules in the traditional world, but they really are kind of made to be broken, or are way more flexible or forgivable after the fact. But But
Yeah, you know what? I actually, my take on it is a little twisted. You know, the way that I get clarity on that is I don't see really there being, you know, any rules in the traditional world. All there really are people in power and what they decide to do with that power, right? And you know, there are laws, but you know, they're rarely acted on, right? And so, you know, if you lie, cheat, and steal in the United States and you're really, really good at it for 40 years, you become president, right? Right? That's the system. But in crypto, the rules are the rules, and we all can know what they are, and they're unmutable unless the community decides to change it.
And I think that makes a fair system for all because the codes are the law, you know, and it's an open book. Yes, not every smart contract is audited properly in this space, but it is there if you want to actually see, and the rules will go according to those to that code. You know, there kind of is no funny business behind the scenes. The scenes are open. It's an open book for everyone to read, and you know that those are the rules of the game. Now, the rules might not be fair, but it's your choice. You're able to, you at least have the force, at least you have the ability to read the rule book before and decide whether you want to play or not. And I feel that that's something missing, especially for a lot of people in traditional finance, especially if you're not coming already from one of those power positions. If you're already not on Wall Street, if you're just an outsider, it's very hard to even get in the game or be playing in the same game or the same field as the players. I mean, you know this well. You come from Wall Street, and you can back me up here. Where in crypto, it's a level playing field because everyone is playing with the same rules and the same equipment.
Undoubtedly, and it's not just in DeFi, but it's in everything. It's in all how crypto works. And for me personally, and I think for a lot of people, that's the most exciting thing about it. We don't have to, you know, there's not a man in the middle who's solving for himself. And by the way, even when it's you, even when it's me, you know, there's no glory in that personally. But you know, working together and building something and changing the world, you know, that is what excites me.
And you know, I've heard some people say that you know what just happened, which is, you know, what happened with SushiSwap on a macro level, kind of could be a turning point for DeFi, where up until now, you know, Uniswap has been around for quite a while now. And people have kind of been interacting with it ever since yield farming, and people kind of been interacting with DeFi in the same way, where they're pretty much providing liquidity just to get the LP and kind of yield farm, you know, high APYs, hop from APY to APY, whatever the highest is. And I heard a lot of people say that because of what happened with SushiSwap, where they showed that there really isn't, you know, allegiance to a certain project, but rather, you know, the best project that's available will win. The place that is you know, that's going to provide me with the most liquidity, with the best APY, with the, you know, it truly is, you know, decentralized finance, when anyone can participate, when anyone could kind of build off each other's code. And I think that really opens the door for increased competition, because me and you are both free market people, and that's what we look for is competition. So, you know, even in a DeFi space, if Uniswap is demolishing the field and kind of the only competitor, that's not even the best, you know, thing. We like to see competition. So this idea of, you know, does this now open the door totally for kind of way better increased competition across the board now that people could copy and add on to code?
Well, look, the fact that it's composable, right, like Legos, right, that is what makes it so remarkable, and how you know it's going to win, because the pace of innovation is, you know, is crazy, right? Anybody can take anybody else's piece and put them together and have something totally new. You know, you can have one line of code and it's so new that, you know, you have $1 billion of assets locked up 5 minutes later. And, you know, and that's where we are. And what isn't forkable though, is community. And, so within the DeFi space, I think by a wide margin, what Yonah is doing, right? They are really building a community, and they have an ethos about how they operate. This whole idea of fairness. I think it's the most nakedly fair project the world's ever seen. And people are excited by that, and people want to be a part of that, and it's completely open. In my view, it's like the next iteration. Before that, there was Metacartel and Metacartel Ventures, which I still think is awesome. But now, it took that and I think layered on top of that a much better operational system to optimize the community efforts.
And what is it about Yonah that's so promising? Is it the fact that it significantly lowers the barrier of entry to DeFi for a lot of people? Because it's very hard, especially nowadays, if you want to keep up, especially with yield farming. You kind of have to be on this 24/7 hopping. But Yonah kind of enables you to kind of set it and forget it. Let Yonah take care of that for you. Is that the idea that they're kind of lowering the barrier of entry, or is it the fact
I think the first thing they did was right. They made it much easier to optimize than it otherwise would have been, and they were leveraging and continued to Zappers technology. So effectively they took out you had to go to Zapper and you had to figure out Zapper, and now you don't even have to do that. So they abstracted that away from the complexity of using Zapper. But then what it layered on top of that was this idea of that they can do that for all different aspects of DeFi. And they don't have to recreate the wheel, right? All they're doing is they're working with the rest of the community. And when they see things that the community doesn't provide, then they can build it themselves. That's what they're doing now. I think a very exciting project is Stable Credit, which is a stablecoin platform. And that's an area that I'm super excited about. So, I have no doubt, just because of their reputation, built up in this tiny short period of time, is that they do things really well. It's like a Pixar movie. You're excited about it. I'm excited about Stable Credit because it's Yonah. And, so they've built a community and a brand that means something. And so it's not just, necessarily getting 0.1% better APY, because the truth is you don't even know if you're going to get that, even though it says it.
Mm-hmm. And, with stablecoins popularity right now, and I think a lot of people who don't really understand the space don't understand that, there are many different ways of doing a stablecoin. A stablecoin is just going to be kind of pegged in value, but there are many different ways of accomplishing that. You could have a crypto collateral backed stablecoin. You could have a fiat pegged backed stablecoin like USDT. And I think that I believe it was early last week, or maybe at this point even 2 weeks ago, where I at least saw a stark reminder of just how centralized these fiat-backed stablecoins really are, because someone tried sending $1 million worth of USDT to a project pool to farm, and instead he by accident sent it to the project address, the token address instead. And so, these addresses are controlled by smart contracts. That money should be lost forever. But someone over at USDT, I believe it was their CTO, I'm not exactly sure, I don't remember at this point, but he tweeted out, it's like, oh, by the way, don't worry about it. Open up a ticket with our help desk. We'll make sure to get that money back to you. And that makes you realize that, projects like USDT and other fiat-backed tokens that have to, they have to go by regulation, because they are a fiat, a US dollar backed asset. They actually have to have certain backdoors built in that allow them to control things by the US government. And so this really, this really changes the game. I mean, this is a totally different animal from a crypto backed stablecoin like DAI. And like many others. So would you yourself feel comfortable using or keeping value in a fiat-backed token like USDT?
Well, so the question is, what are you using it for? And for me personally, like one of the oh my god moments that I've had in crypto is when it came out that Tether, which supposedly had $1 in the bank for every dollar of Tether that it issued, actually only had 75 cents. And Tether went to 90 cents, quickly, and then just as quickly went back to $1, and nobody cared. And what was remarkable was the realization that, in fact, nobody was getting Tether, right, to take it to the bank and get $1, right? People were only taking it as $1 because, 2 minutes later, they were going to give it to somebody else, and all they needed to feel was comfort that in 2 minutes or 2 hours, somebody else would take that Tether for $1. And so and even though they didn't have 75 cents on the only 75 cents on the dollar, people still had the comfort that they could use it as $1. And in fact, that's held true really ever since. And so, to the degree that all you're going to do is trade with it, it's proven to be, I think, incredibly efficient. Now that said, obviously there are a lot of problems with the centralization, including that, you can get blacklisted, right, and no longer be able to use it, in your wallet if it's centralized. And so to me, that's a bigger problem. So yeah, I'd use Tether to trade. I'd probably be less likely to use it to hold in an account as a store of value. While most people say, well, if you haven't done anything wrong, you don't have to worry about that. I can tell you that has not been my experience in life.
Right, exactly. And I think this idea of governments and cryptocurrencies and the stable coins are becoming more and more relevant right now. As China gets closer and closer to a CBDC, there is a rising voice kind of in the crypto community that believes that there kind of has to be a collaboration between the private crypto community and the U.S. government to kind of provide an alternative to a Chinese CBDC, to provide a kind of a Western, let's say settlement platform type of thing to actually combat with that, and to hopefully modernize the Federal Reserve System. Because if you do believe in this technology, and China is the first one there, that could then take a massive foothold in the global economy. What's your take on CBDCs and China potentially issuing one, and what the U.S. response should be?
Sure. Look, I think CBDCs are a huge subset of the stablecoin. It would be outside of DeFi, obviously, because it's by definition not decentralized. It's the central bank. But in terms of people getting more comfortable using digital assets, oh my God, right? So, if they can teach 1 billion people in China to use digital assets and digital wallets, even if those wallets necessarily aren't open, you now have a massively educated population who's now comfortable using something. And so from my perspective, CBDCs are only going to be hugely positive for the cryptocurrency ecosystem. And that said, look, I look at this as just another form of innovation. And it would be like if in the 90s, the US said, we're not going to, have an internet. We're not going to allow the internet here, and just had allowed the internet to proliferate elsewhere. My God, how far would we have fallen behind, right, in global innovation? And so, I think, the faster our government does it, the better it is for everybody, every U.S. citizen. And, I'm a huge follower of Dalio and his belief that, the U.S. empire is waning at a faster pace every day, and the Chinese empire is rising, and that's and China's going to be the center of the universe, very quickly. And most people don't realize it, and there's nothing wrong with it. It is what it is, and the U.S. can still optimize a lot of things, 100x better than it can, but it's not going to be the world's focus like it used to be. And certainly, the slower they are at adapting, to CBDCs, the faster that will happen. That transition will happen.
And for sure, not helping America's cause is their fiscal policy, where they essentially are devaluing their own currency by just endlessly printing it out. I mean, all roads point to inflation. When you're printing money endlessly and you're not really creating value behind it, you know, from my understanding and my belief is that will hit. You know, you're going to hit that inflation point at some point. But how come we're not seeing that yet? You know, how come we're not? We're seeing the reactions.
This
not
is
the
a great question, right? This is a great question. What you realize is, you know, economics, while it's a science, is all theory, right? So, you know, we know remarkably little. You know, one area of economics that I've been reading about more lately, I would not call myself an expert, but yeah, I liken my experience to my experience to Bitcoin. That the first time I saw Bitcoin, I thought, wow, how incredibly stupid is that, right? And you really have to open your mind a little bit and broaden, you know, how you think about things to appreciate Bitcoin for what it is. And I'm talking about modern monetary theory, which is the belief that you can actually, if you're a country like the United States that can print money, you don't need to collect taxes. Why do you just print money to handle, you know, and as long as people have confidence in the currency, you can continue to print the currency, right? You know, they printed more money in like 1 month, you know, a few months ago in the United States than they had in, you know, the first 230 years of our history, and nobody cared, right? The dollar didn't move. So it didn't change, you know, just like when Tether said they only had 75 cents on the dollar. Right? These are just confidence games. Now the question comes, well, when does a confidence stop? Yeah, and you know, again, it's like predicting the weather. Out, you know, we can predict it out about 10 days. Beyond that, we know on average where it is, but we have no ability to actually predict the weather, and so we don't have any ability. There are so many confounding factors to predict. Okay, when is confidence going to you know, start ebbing and then, you know, fall off a cliff? And certainly I think people believe, well, the more that's out there, you know, the more likely it is that people are going to lose confidence. Hard to argue with that, but, you know, are we close to that, or could we do this for another 100 years? I mean, hard to imagine we could, but the truth is nobody knows the answer to these questions.
Yeah. You know, I've read up a little bit on MMT, on modern monetary theory, and it's somewhat easier for me to understand if I'm focusing just on the United States. But once you factor into the fact that the U.S. dollar up until now has kind of been the global the global currency, you know, that countries that internationally use to even transact with each other, it becomes harder to actually believe, because it's like when you're playing Monopoly growing up, and you know, if one guy's cheating and just keep on taking more and more money from the bank into his pocket, you know, you're going to get pissed at him. So while I understand if the U.S. citizens are okay and it doesn't affect internal economics, you know, the fact they're printing endless dollars because we're becoming wealthier. But I have to imagine that on a global scale, countries are not going to want to play this game. Countries are going to start to feel a little shifted by the U.S. saying, hey, wait a second, how come you guys get to continuously increase your own money supply? And if it stays at the same value, you guys even get to create value, create money for yourselves, print it at will, and we're the ones getting shortchanged here. So how do you reconcile that on a global scale?
Sure, look, again, I mean, it's hard to argue with that. It just sounds like right. You know, just on its face. You know, that said, I think if you take a look at what's been happening in Japan, you know, Japan's been doing the same thing. Japan's been, you know, has a larger debt as a percentage of GDP than the U.S. does, although I think the U.S. is going to pass them by this year. And so, you know, this has worked for Japan. You know, and again, it works till it doesn't. I mean, Japan, I think, is the only country in the last like 200 years to have debt to GDP be above 130% and not have the currency go to shit. And it's like, you know, wow. 49 of the 50 other countries. The U.S. is just about to enter that territory, right? So, you know, I mean, I believe one of the strongest forces reversion to the mean. And the mean here is that your currency devalues. In my view, it's not just the printing of the money, but our position as the reserve currency, also lets us use things like the SWIFT and how we send money around the world. The U.S. effectively controls that, and uses it, as it wants. If it doesn't want Iran to get any money, now we can see when people are using SWIFT to send Iran money and take sanctions against them. And the rest of the world doesn't, it didn't like U.S. being in that position before Trump, let alone now how Trump is using that information and sharing it with Russia and, whatever else he's, doing with it for whatever God knows what. So I think that's even driving other countries to try and kind of de-dollarize than even all of the printing that's going on in the U.S. is.
Mm-hmm. Yeah, I mean, it's if you do look at it, I think we spoke about this last time. I think this is the first time in history that the majority of trade between Russia and China is not happening in U.S. dollar anymore. I mean, I think the world is definitely waking up and saying, wait a second, we're not so happy with you guys playing, being the banker, running the bank anymore. So it'll be interesting to see how that develops going forwards. But now that we're on the topic of kind of influencing the supply of a currency and of an asset, obviously I read in a little bit about a company or project that you spoke about called Ampleforth. You want to explain a little bit how they work and what's the economics behind it?
Sure. So I think at a very high level, the idea behind it is if you want to have a currency, and there are different tools that the central bank uses to manage the currency, including most notably like interest rates, and it does use the supply, but there's a long lead time in how it uses supply. And what Ampleforth is doing is it's using supply on a daily basis. It changes the supply to hit a target price. And the target price is, interestingly, the buying power of the 2019 dollar. And while there is a target price, it's really not a peg. So to say, they're not trying to get it to there. It's not really a stable coin. Rather what it is it's an experiment, I think, for lack of a better word. They call it base money or commodity money. I think that's where they might hope that it's on a path to, but I think, it has to have other properties to, in fact, be that. But this idea of recalibrating the supply every day, effectively based on the supply and demand of, Ampleforth in the market, is just kind of a unique way of thinking about a potential kind of primitive in the DeFi space. That could be base money. It could be something else, right? Right? Bitcoin set out, I think, to be peer-to-peer currency, according to the white paper. And today it's I think, the world's best store of value because it has certain properties. And so, Ampleforth has these unique properties. And how can that be valuable? One of the things that they talk a lot about is the fact that it's potentially uncorrelated to other crypto assets. And all crypto assets trade together. And when you have something that's uncorrelated, adding that to a portfolio can generally add value to the portfolio because it brings down the average volatility, which has value.
But don't we already have algorithmically controlled supply stable coins? Like like USDT, they are supposed to be burning and printing, adjusting the supply and demand, accordingly. How does why would this be any less correlated once it starts trading pairs than any other cryptocurrency?
Again, because of its the unique system that they have in place for changing or adding or taking supply out of the marketplace every day. Again, it's going to have certain properties that nothing else has. Maker, DAI, in fact, has a bunch of other properties that I think are valuable. But They're, I think, pretty distinctly different from what Ampleforth is doing now. It could be that these properties, in fact, don't really have any value, but the only way that we learn is by doing. And so that's why, I'm a huge advocate for anybody out there who's, in a transparent manner, like Ampleforth is, saying, here's what we're doing, and come and join the experiment.
Mm-hmm. I mean, and speaking about, the peg price, they're aiming for a price. They're not pegged, but it's interesting because if you look at DAI's trading above peg right now. And how is that even possible? How is it trading above peg, and what does that mean about DAI, for DAI, that it is actually worth more than $1?
Well, again, at a very macro level, it's just simply that you have higher demand than they're able to meet from the supply standpoint. And in part that's driven by this DeFi craze that, because the stable coins are base money in, for these. Or I'm sorry, they're actually not base money, because stable coins generally have something behind them. But in any case, and so actually on Stablecoins Are Killing It, episode number 15th, which is happening this week on Thursday, we're actually, one of our speakers is going to talk about exactly why the maker, DAI is off of its peg, and he has some suggestions about how they might, be able to rectify that.
Mm-hmm. Well, I mean, it's kind of similar to what we were talking about with USDT, where at the beginning, it was important that it was $1. There was $1 behind it, but then once we realized there wasn't $1, and people didn't care because it had its use, it was just being used as a tradable asset. So could that also happen to DAI, where essentially it doesn't really matter if it ends up being pegged to the dollar, if it already becomes so established in the DeFi ecosystem that there always will be demand for it to be used on these things? So is it really the end of the world? Will we see a similar idea happen with DAI?
Again, why does Tether trade, right around $1? Because to some degree, right, weirdly, like that's the property that it has is the moment, as opposed to like other properties which are built in by code. I think this property is kind of a social property that we've all kind of agreed to, that will be right around $1. DAI, I think does not have that same contract, and trades more like most other assets do, based on supply demand. And obviously they have mechanisms to get it to $1, but those mechanisms, obviously aren't functioning real well today.
Mm-hmm, mm-hmm. And right now, there are pretty much, stable coins is what powers DeFi, and right now most of stable coins are coming from the crypto sphere itself, from projects, from exchanges. But now, there are traditional financial institutions that are also going to be releasing their own stable coins. There's a consortium of more than 13 global banks called Finality, including Barclays, Credit Suisse, Lloyds, UBS, and some others that are all banding together to also release their own stable coins. And what kind of effect do you think that will have, on the crypto sphere and on the DeFi space? Will people view these external, more traditional institutional stable coins as more secure, as more trustworthy? Will they be more wary of it because, they'll view it as kind of a more centralized outsider thing? What effect will this have, if any, on the crypto space?
Sure. So, to a large degree, I look at these at least as, similar to how I do as, USDC, right? So, I believe that, USDC actually does have $1 for every dollar that it has, outstanding. They get audited. It's sitting there in a bank. And so, so I see what other banks are doing is being very similar to USDC. And now the question is, okay, well, what other properties are they going to have? And, I think, maybe one simple analogy would be to think about credit cards, right? All credit cards essentially do the same thing. You use them to buy stuff. But at the margin, they all have different properties, which is why we all have different credit cards based on the properties that that we want in the credit cards we use. And I think stable coins will evolve like that, but I think with a far greater expanse of properties than we think of the properties that credit cards have today.
Mm-hmm. That's a really interesting analogy. I never thought about it that way, but I appreciate you putting that picture in my head now, because it really does help organize things a little bit up there in the head. Switching gears a little bit, you keep on coming back to this idea that it's all about community. At the end of the day, the community is what drives innovation and what drives usability. And what has historically, and it still is the case, one of the biggest communities in the crypto sphere is Ethereum. And Ethereum has kind of hit, is constantly hitting its ceiling in terms of scalability, at least on 1.0. And they've been promising Ethereum 2.0, with sharding, with proof of stake for so long. Will we ever see Ethereum 2.0? Will we see it this year? Will we see it ever? Is Ethereum, there's so much value and investment on Ethereum. Are they even in a rush to put out Ethereum 2.0?
I'm less of a technologist. Again, I got very excited about Ethereum when I went to ETH Denver earlier this year and saw the strength of its community. And really, in the 2+ years I've been 24/7 crypto, I hadn't seen anything that began to touch that. I've been impressed with the Tezos community. I think it's, that's one of the other solid communities, but it's not at all the scale that Ethereum has. And so, and I think that that's a real moat. Now, obviously that can ebb over time if, there are better, Ethereum killers, for lack of a better word, that, that come out. Whether it's a Polkadot or a Casper, or ones that are even more different than that. But to some degree, I look at it as it's Ethereum's to lose. I think that they've got such a big lead, and they have so many incredibly smart people who are very dedicated. That it's hard for me to imagine that they're not going to figure things out. But if they don't, over time, the community will ebb.
Mm-hmm. And if you look at Ethereum, the first thing that actually, bogged down the network historically, before DeFi was actually CryptoKitties, which was a very simple, basic NFT that was very popular. And at the time, it really was that first, major use case for the network besides just Ether. At the time, obviously things have really advanced and grown, but have NFTs, have they kind of fallen to the wayside, or is there still a future for them, to get back into the spotlight that DeFi has taken?
Oh my God, no! NFTs are going to be a very, very, very foundational layer of everything that goes on in crypto, and I think a lot of what's going on in DeFi will all be NFT, right? You got companies like Centrifuge, right? So they're taking invoices, and they're basically taking those invoices and turning them into NFTs, and then having getting loans against them on Maker, right? So I mean, NFTs are every ticket that Ticketmaster sells is an NFT, and now that ticket is not just telling you what seat that you're sitting in, but it cannot have now an infinite number of other properties, and that's in addition to the collectibles aspect of it. And now that we're seeing an explosion in art, in crypto NFT art. So it's early days, but I think NFTs are really exploding today.
Mm-hmm. You mentioned a really wonderful use case where someone takes an invoice and brings it to the DeFi market. And I think that's kind of what's been, like, in my mind, really missing, because up until now, it's kind of just been a circulation of money where they're providing, just crypto liquidity and then getting back more crypto than to put it to make more liquidity. But what I think is what has been missing is, when you go in the real world, how I view lending. When I first heard of DeFi, I thought, decentralized finances, everyone could be a bank. And I guess I was a little naive, and I thought maybe a little bit altruistically, but I thought, you know, that people would instead of going to a bank and I have a great business idea and I beg them for a loan, I could put my business idea to the world, and then, you know, from the world, from the global community, I could then get loans to help me create value. And I feel like that's been a little missing in my eyes so far from DeFi, where it's been less that I want to create value. I have a great idea. Someone give me a decentralized loan, and more the speculative vehicle. And with invoices, I think that, and NFTs with DeFi, I think that actually allows now suddenly kind of what my hope was for DeFi to actually happen, because now you could actually take great ideas, great real world value, bring it to the DeFi space and try to make more value in the real world as well.
Yeah, I think, well, what you're talking about in terms of raising money and such from like an idea, or yeah, like I'm a big believer in personal tokens or social money, you know, as well, where, you know, you can go and you can say, okay, I'm going to give 10% of my earnings for the next 3 years to people who buy my personal tokens. Or I can do anything, you know, I can set up, you know, it can just be my word for the personal token, or I can actually set something up like a Telegram group, and, you know, like Karma DAO, and say, okay, you know, if you have a certain amount of karma, then you can come into, you know, my Telegram group with all of these other great crypto people that you can learn from. And so you're giving real value to the utility value to the coin holders. You know, I think, you know, ultimately, right, that's what this is all about, is, you know, what's the real value, and the idea of community is everybody gets more value out of it than they put in, which is magical.
Mm-hmm. And especially, you know, then it comes, you know, more interesting ideas where then not just utility tokens for a person, but even governance tokens for a person, and then all of a sudden they're deciding what you're eating for lunch. You know, the possibilities there really are fascinating. And Lou, I have one request. When you launch the Lou token, please let me be involved in I want to get in that pre-mine. I want to be able to cash out, because I will fully invest with you. Lou, thanks so much for taking the time and giving us always your wonderful insights and ideas on crypto and the DeFi space. And for all of us here at Reimagine 2020, I'm Yonah Hochhauser. Thanks for watching.